Hello everybody, it's a Stable Ad back with you with another weekly update video. I'm going to talk a little bit about the portfolio today. I'm also going to talk a little bit about what I'm doing over here on Substack to kind of make the paid subscribers, give the paid subscribers a lot more value for supporting the channel. And we're going to talk a little bit about the news, some of the cool things that are happening in stablecoins, and then of course we'll end up by getting to some of the portfolio moves I've made. The first thing I wanted to show you here is I just wanted to show you a couple of things that I'm sharing over on the Substack. So when I first started this channel, I didn't even want to do a YouTube channel because being in crypto and talking about crypto it's a pretty big security risk, which is why I don't show my face on this channel, and that's why it's faceless. And I really kind of just wanted to just go on Substack and just write a bunch of articles and be an anonymous person over there. But I was convinced that I had to do YouTube, and so here I am putting these videos together, and I'm glad that they've been pretty well received. Obviously, being a faceless channel kind of hinders the growth of YouTube and makes it a little less interesting to watch. But thank you all for sort of bearing with me on some of these things. But what I am trying to do is make my Substack more of the hub where you get a lot more of the detail. So on this, I kind of talk about some things generally and broadly. I share my screen with you. And then over on Substack, I actually share all the details. This is kind of a little sort of semi-view of what paid subscribers see. And I've made it as cheap as possible. I think I did it the lowest amount that Substack will allow me to charge. There's an actual minimum that they make you charge if you're going to do a paid channel. I think I did the minimum. So anyway, it's super affordable over there, and it does help me kind of keep this channel going. I do all this stuff by myself, and it is super time consuming, especially trying to grow both things. So I appreciate everybody subscribing. I appreciate everybody, whether you're a free subscriber or a paid subscriber. I love you all. Thank you so much for doing that. But I just wanted to show you, just give you a little bit of a view of what paid subscribers will see over on the paid part of Substack. This is a kind of I've hidden a couple of the things here which show the actual sizes of each thing. So this is the sort of high level view of the way the portfolio looks that I share over there on that channel. It will show the actual amounts that are in everything. It shows I update these APYs generally weekly. It shows both the APY I'm getting plus the weighted APYs, and then averages down here of what I'm expecting. This is not fully accurate because I still have a bunch of cash positions that I haven't deployed. But just to give you a sort of idea, I show you the risk grade of how I've graded these things. It goes into which protocol these things are in, what the asset is, the underlying asset. And then I do also coin mix. So I'll do like the amounts of USDC and USDT, DAI, USDS, all these kinds of things, so you can kind of see and have a full view of every single thing that I'm doing, every trade that I make, every new investment decision that I make, and then what all those allocations mean, what percentage of the portfolio it is, all that kind of stuff to show you. This is the broad view. So I mean, you could see like 31 positions. A bunch of these are cash right now because I haven't deployed everything yet. But I hold generally 20 to 40 positions at any given time to spread out the portfolio. And so there's a lot of moving parts, and paid subscribers get that full view. Another thing that I've just started to do for paid subscribers over here on the Substack is I'm creating tools. So this has been in the works for a while, and I'm working on doing that. This is just a little snapshot of the tools, of the protocol grades. So it's essentially like a cheat sheet of all the protocols that I review, and I've done a bunch on the YouTube, right? And I've done a few over on Substack where I do deep dives on some of these things, but this is a lot bigger, right? So this has a lot more in it that I haven't done deep dives on yet, and it's also the most accurate. So if you're watching something on the channel, it may be a few weeks, a few months old, and things move fast in DeFi, and I do upgrade and change the risk of some of these things. And so if you wanted kind of the updated access, you'd come over here, you'd be a paid subscriber, and you'll get these tools where I update them constantly. And so you'll have a cheat sheet of at least of how I grade all of these things, all these protocols. This is the first one I've done. I just released it this week. I'll be releasing a stablecoin cheat sheet. I'll be releasing a blockchain cheat sheet as well, sort of how I risk and rate and think about blockchains and blockchain risk, and which blockchains I feel I would put all my money on, which chains I'll put only a little bit of money on, that kind of stuff. And I'm just going to keep adding all kinds of tools over here, so you get the full view of the portfolio plus all these tools. All right, enough of me selling my channel shamelessly. But again, thank you. Like, if you're going to be a free subscriber, I totally get it. Like, I'm not trying to pressure you into subscribing. I'm just showing you that if you do want to be a paid subscriber, there are tools, and I keep building out tools for paid subscribers that I think should have a lot of value and a meaning for people that do pay. And again, it's the lowest cost structure that Substack allows me to do over there. So, and again, just something just helps me support the channel. Let's get to the news section. Actually, I'm going to go to this one first. Here it is, this one. So S&P, if it loads up here, yeah, here you go. I think it's HSBC, and said S&P Global Ratings' decision to cut Tether's reserve assessment to weak is a reminder that stablecoins carry an embedded depegging risk that doesn't apply in the same way to other forms of tokenized money. So I may go and it is likely that I may go and change the risk rating for USDT. There was a time over the last couple of years that I wouldn't touch USDT because of the opaqueness around their reserves, and I had since they were basically sued by the New York Attorney General. They cleaned up a lot of their reserves to make them a little bit more straightforward and transparent, but there's a reason why they're creating a new token to be compliant in the United States, the USAT token, and that's because they don't want to prioritize security. They're prioritizing revenue, not security, whereas Circle is prioritizing a lot more, at least, prioritizing security over revenue. Both companies are making a ton of money. Tether is a cash-making machine. So I really am not really super worried about them having a bank run, depegging, and not being able to fix that depeg. But I may decide to change the risk of this medium to like a medium risk. Again, it will be, it'll be back over here on my Substack I don't know why this is taking so long to load today, in these tools that I'm providing. So again, if you subscribe, you'll see any of the changes I make. I may make it medium risk, and then they may come out and make a fix, and I may decide, let's bump it back to low risk again. So that'll be all done over here. If I do that, I will also do a video about that because I think it's important enough to kind of make sure it's mentioned publicly. But that's something that I will likely do. Another thing that I thought was really cool or interesting in the news that was released today is, or at least this is in the news today. It actually happened, I think, yesterday. But Citadel challenges DeFi framework in a letter to the SEC, sparking industry outrage. So because Citadel, as we know, is a beacon of good for the world, right? Like, they really want to protect users and investors. That's why they're doing this, because of their benevolence. Citadel Securities told the SEC that certain DeFi protocols handling tokenized U.S. securities may function like exchanges or broker-dealers because they match buyers and sellers. And they go on in this letter. I don't know where it is exactly. Oh yeah, right here. Citadel also said any regulatory relief should come only after clear examination of investor protection implications, warning that inconsistent oversight across tokenized and traditional markets could lead to gaps in transparency and compliance. So, right, in their benevolence, they really want to protect users because that's what Citadel does. It's really funny and ironic, right? The reason why I want to bring this up and talk about it on the channel is because DeFi really is a threat to the way of sort of traditional markets and the way they traditionally work. And having these sort of unregulated, smart contract created systems are a challenge to the old systems. And here, let me. I don't know, my computer's freezing a little bit. Sorry about that. Let's go down here. Yeah, here. So they said that okay, so he pushes back on Citadel's claim that DeFi cannot guarantee fair access. So Citadel in this letter also said that DeFi cannot guarantee fair access, and of course Hayden Adams, the creator of Uniswap, he argues that permissionless protocols actually expand rather than restrict participation, which of course is true. DeFi protocols are available to anybody. It doesn't matter where you are in the world. It doesn't matter what your bank account looks like, what your credit score is. It's far more open than anything that Citadel has access to, or traditional markets have or give access to. So again, just making a point here that DeFi and its potential coming over here basically crying to daddy the SEC, like, you got to help us out here or we're going to lose business. And they're doing it in a way that makes it seem like they're trying to protect the user, which is obviously BS. But again, just sort of points out how big this space is and how important DeFi really is, how revolutionary it is, and also expresses the full opportunity of what we're talking about here on this channel, which is using stablecoins within DeFi to take advantage of an opportunity that just crushes traditional markets and really is something that likely every bank at some point will have in the back end, right? JP Morgan isn't going to be put out of business because of this. Chase will adopt likely DeFi and we'll have the DeFi mullet. It'll be the traditional bank in the front, DeFi in the back. They'll offer you, the ability to kind of take your cash. They won't even call it stablecoins. Take your cash, put it with us, and let us, spread it into DeFi using whatever it is, Moonwell, whatever the system is that they're going to use to earn DeFi, to earn some sort of DeFi yield. It's going to happen. I can't imagine that it doesn't. More to that point, Coinbase CEO Armstrong says banks that don't adapt to stablecoins will be left behind. This stablecoin revolution that's just getting started, it's so big. Being in the fintech space for almost 20 years and seeing just the growth of digital payments through Visa and MasterCard, and you just look at their stock prices, look at their cash flows, and look at the market that Visa and MasterCard has, and then every industry that's been built on top of that. Massive companies like Shopify and Stripe and all these companies that are built on top of the digital payment networks. That's just one little spot where stablecoins shine. We could talk all day long about how you can use stablecoins for just so many different things: remittances, payments, all that kind of stuff here. Fin over here raised $17 million, led by Pantera and Sequoia, which enables users and businesses to move millions of dollars instantly around the world. There's just so much that's happening here under the scenes that's really changing the way payments are made. And I really think that, I've mentioned it before on this channel, but I'll say it again, just for a good little easy to understand comparison. Stablecoins do for payments what the internet did for information, what email specifically did for information. You can send an email anywhere in the world at any time, practically for free. Stablecoins are basically doing the same thing. You can send value anywhere in the world, and the stablecoins that lead are all basically in USD, and that's a boon and benefit to U.S. Treasuries, and I think really saves U.S. Treasuries and saves USD as the sort of global reserve currency, which I think is really why so many politicians on both sides of the aisle have embraced it. Last thing I'll just mention, I don't know if anybody, I think most of the people that subscribe to our channels have good paying jobs and are trying to figure out how to invest their money, but it's just really interesting to just sort of look at this from a macro perspective. This is cryptocurrency jobs, and you can just see how many jobs here. These are all I just searched remote jobs, right? And you've got just gobbles amount of jobs here available for really, I mean, look, this is Circle. These are big companies. This is a publicly traded company, right? Polygon is a massively funded company. These are not like Bitfinex. These are not small businesses here. Figure, just another great big company. The Cash App, Cold Wallet Operations Manager. I mean, these are just so many cool things here, and I can just keep scrolling down the page. Back in 2021, 2022, when the markets died and the FTX exploded and Celsius died and all the other things crumbled, I mean, there was like no jobs. Like everything just dried up and died. So if we are in a bear market, it's a pretty good bear market. And I think that we can see that even if we are in a bear market, we've got plenty to be excited about in terms of the long-term growth of crypto. Off-chain labs, this is Arbitrum. I mean, Morpho Labs. This is just really, really cool to see. I kind of want to apply for a job and work for Circle. To point out on the sort of macro side, and it's something I've been thinking about because I mentioned it on the last update that if we are in a bear market, I just don't think this 4-year Bitcoin cycle is important anymore. And I've really been thinking that if we are headed into sort of bear market territory, that we would have a much more quicker turnaround than the normal sort of 4-year cycle, right? But even if we are in a normal cycle, I saw this from Joe Burnett here, this really interesting chart that he mentioned, and I think it's sort of, again, maybe this is me searching for a narrative that sort of fits the way I feel. It probably is that, but it's really an interesting sort of thing to look at, right? He says, have you considered that Bitcoin top occurred when the President of the United States and the First Lady launched meme coins? And if you remember, like if you were in the market at the time, like the market was absolutely raging. I mean, the Trump meme coin just like, I mean, if you were to look at top market signals, right? Celebrities were in launching meme coins. The President of the United States and his wife launched meme coins. Like it's kind of really interesting and could be real. And like if you look at this chart right here, right? Like this kind of looks a lot like 2021 where you had the first run up. And then the CME futures for Bitcoin launched, and we dropped down, and then we just ripped again at the top of 2021, and then started to die, went back up a little bit. FTX exploded, died, and then kind of went back down. So, I mean, maybe we are, maybe we're not. Maybe this just sort of fits the narrative that I'm looking for it to fit. But it really is a really interesting thing, and if this is right here. And we peaked over here in March, then by the first quarter of next year, which is sort of what I was thinking might happen, right, that we actually have another bull run begin, especially if the stock markets continue to rally, if the Fed injects cash into the system. It could all go for crazy blow-off top experience with AI going nuts. We'll see. Either way, I build my portfolio to last through any market. That's why we come over here. That's why we talk about these things. And that's why, if you look at my portfolio, let's go back over here. If you look at my portfolio, again, this is not the full view, but if you look at it, this is why I'm spread out in all these different things, why I have low risk positions that pay 6.3%, 4%, 5%, and things that pay 48%, flyers that take that kind of much. So that's why I spread it all out to take advantage of any market, no matter what it is. Let's move on to some of the moves that I've made this week. So I have been updating the portfolio slowly over the week, and I will do a full deep dive again for paid members over on the Substack, where you'll see all the moves and the allocation, specific allocations to each thing. But some of the moves I am doing and have done are these here. So I haven't done this one yet. I got to bridge some cash over to Camino to take advantage of this Centaura PY USD. I'm going to prioritize this as a medium risk play. I think it's going to be a medium risk play because it's a little bit more conservative in spread. But the supplying APY is 10.34% for a medium risk play, which is not too shabby over on Camino, which is on Solana. Over here on Beefy, this is a high risk position over here, but it is USDC, USDT, and Go. So Balancer would be a medium risk position, but because I am restaking it basically over here on Beefy, that turns it into a high risk position, which caps my play at 2.5% of my portfolio as a capped position, but it's paying 13.82%, and it's been pretty consistent over several month period, right? So the average here, 12.15%, is the average over the past year for this specific liquidity pool over on Balancer. So I like it. And again, for a small play of only 2.5% of my portfolio, I feel pretty comfortable. One of the low risk positions that I put some money into here is USDT, USDC over on Arbitrum. Right now paying 4.69%. Yesterday it was paying something like 8%. So that's going to fluctuate. It's going to go up and down. But in general, it's a heavily used swapping pool. So there's a lot of fees in that pool, and I'm comfortable just sitting it, holding it, not worrying about it. Over here on Avalanche, this Go pool here is paying 6.62. Last month, I think it was paying over 7%. So going up and sort of down, but the Go marketplace is growing over here on Aave, and deploying capital over on on Avalanche, Avalanche, Aave with the Go token. Go is a medium risk token for me, so it's technically capped at 5% of the portfolio. So, but I may re-rate that as low risk too coming up. It's proven itself in the ups and downs of the market. So I may go and re-rate that one as well as USDT in the coming weeks or months over there on Substack. It's one I mentioned on previous updates here, but money is going to be deployed over here onto Base. This is Compound on Base. This is a low risk position, and it's paying 6.98% over here on Base for USDS, which is Sky's USDS token. I haven't deployed the low risk portion of my portfolio because it's the most boring and the lowest APYs, but there's the likelihood of me putting over here on, it's basically going to be between Compound and Aave, whether I can make more money with like USDC. Here's USDC bridged over here on Base. Like this is healthier than I've seen on Aave. So I'll probably be doing more of this on Compound, but it'll be between Compound and Aave. I'll split those up. Let's see over here. We already looked at that. Another healthy looking market on Fluid. This is a medium risk position here on Fluid. I usually like to make a little bit higher percentage when I upgrade the risk from low risk to medium risk. And as we just pointed out on Avalanche, it was paying a little over 6% on a low risk position. So that'll be sized higher. And then Go on Fluid, I'll be putting money into this one at 7.25%, but it'll be a medium risk position capped at 5%. So I may put it at 5% or I may put it at less. Another pool that I added money to this week is right over here on Avalanche. It's the same pool that I just mentioned over on Beefy, the USDT Go USDC pool on Balancer, but that was on Arbitrum that Beefy is paying additional amounts for. This is straight on the Balancer blockchain. It's a V3 pool. And so that basically means it's built on top of Aave here. It's Aave boosted. So we're making between 11 and 22%. I've also staked the position to earn all these extra staking incentives right here, where it shows Balancer staking incentives at 7.34%. So that's sort of the bulk of that of those extra rewards over here on Balancer. There were some awesome pools over here on LFJ, which is Trader Joe, basically, AMM. And there's three really good pools that I've deployed capital to. The first is this one here, which is the largest pool that I deployed capital to. This is on Avalanche, by the way. They are on Monad, so I have been looking at those pools over on Monad, and Monad is something I may bridge a little bit of cash over to because there are some opportunities on Monad, but I just haven't done it yet or decided to do so yet. But I may end up doing that. But here are three pools that I put money into: 13.99% here. The fee APY 8.12, and then rewards 5.87. So these are all reward pools that that I put money into over here to earn extra rewards on LFJ. But as you can see, they're like, for a medium risk play, like, that's pretty nice. 13.99%. I rebalanced my portfolio. I've taken, away all of the riskier stable coins, and I'm starting to redo things in a much more methodical way. And one of the stable coins I feel confident to rate as a medium risk stablecoin is this Agora stablecoin, AUSD, right here. And again, this is a medium risk stablecoin, so I'm capping it at 5%. So these are two small positions for me, but I put both money in this pool and this pool. So USDT and USDC. This one's earning 18.34% and 18.85%. And you can see here, it's less on the rewards and actually more just on the fees, which is, I always like, if you can, have more of those rewards. And then if you take a look here, just as a peek here, I sorted this by liquidity. I didn't want to put anything in any sort of really small pools because I wanted it to be as consistent as possible and be large markets where there's a lot of trading and activity. And then you can just see that there is here, right? This is a lot of volume, 8 million here in this pool, and almost $3 million of liquidity in the pool. These ones are the same. They've dropped a little bit, but 1.6 and 1.4. I'm going to keep an eye on these ones. If that sort of adjusts a little bit, I'll remove the capital from those. But LFJ got some really cool pools over here. Euler, one of my medium risk plays, because I'm trying to grow the medium risk side of things, and it's actually a little bit harder to do. The higher risk is easier because you're taking smaller bets and you're getting higher APYs. Medium risk, you're trying to shoot for high APYs, but it's harder to find good medium risk stuff that's like at 10%. This was one of the best I saw at 7.28%. Again, nothing crazy, nothing that sexy, but this is run by so Euler is the capital allocator over here. It's got 47.8 million in here, and Euler has done a really good job, even through all the balancer exploit and the stream finance stuff. All of the Euler run vaults were run so conservatively and so well that they had no exposure and no issues. So I feel confident and comfortable holding capital here. So then on the high risk side, the only other adjustment I made was I had my beefy compound on Polygon was a little oversized, so I just removed some capital from that to redeploy into some of the ones that I mentioned today. That's basically it. I have considered and thought about moving money over to mainnet over here, and we can take a look at mainnet, Ethereum mainnet here. Let's look at over here only, because you could see here that not only are some of these percentages really, really high, but the TVL is high on these too, which just goes to show you how deep the Ethereum mainnet DeFi ecosystem is. So I have considered that, but I really don't want to pay ETH gas fees. There is a massive upgrade coming really soon to Ethereum, which is going to scale Ethereum really, really nicely, and hopefully have some good, serious effect on the gas prices. And once it does, I may consider then bridging money back over to ETH to take advantage of some of these deeper pools. And if that happens, I'll be really excited to kind of do that over there. And then let's just take a look. There's not much listed over here yet on on DeFi Llama in terms of Monad, but there are some good markets that I've noticed. There was a couple over here on Gearbox here. It's got 22 million in it for USDC. So there's a bunch of things happening over here on Monad that I'm just taking a look at here. Let's go look over here if anything cool is on Monad. Yeah, so let's take a look here if we find anything really interesting. Nothing that cool over here, but worth talking about. Look, AUSD and USDC paying 13%. Not too bad. I'm going to keep a look at this, and I'll report on Monad later to see if, so stay tuned on the next updates to see if anything really interesting is happening on Monad. I may consider putting some stuff over there because, again, it's kind of like its builders have ported over some of the best DeFi applications over there, and so I expect that it's a little bit of a safer blockchain to kind of play around with when you have the confidence of major DeFi players moving over to that chain. So anyway, that's it for this week. Hope you have a phenomenal weekend. I'll be back next week with more updates to the portfolio. And please, if you like this channel, please share it, subscribe, like it, comment. Let me know what you like, what you don't like, what you want to hear more of. And until next time, I'm the Stable Lad. Stay stable, friends. I'm the Stable Lad. And if you like today's video, please hit that subscribe button. Every week I break down what's happening in the world of stablecoins and why it matters, clearly, calmly, and without the hype. This channel is for educational purposes. It is not meant to be financial advice. So always do your own research and manage your risk wisely.